Welcome back to another episode of ProsperFin TV. Today, we're delving into the intricacies of stock sectors. Just imagine the stock market as a sprawling metropolis, where each sector represents a unique neighborhood, each with its own vitality and vibrancy. From the high-tech district buzzing with innovation to the healthcare borough dedicated to wellness and the energy quarter fueling the city's heartbeat. Yet just as every city neighborhood has its own set of dynamics and challenges, so does each stock sector. You might be wondering, how do you assess the vitality of these sectors? How do you distinguish between a thriving sector and one that's on the brink of a downturn? Well, consider yourself as a detective on the hunt for clues that reveal the health of these sectors. Stick around because by the end of this episode you'll be equipped to unravel the mystery. Think of the stock market as a bustling city, each sector akin to a distinct neighborhood. Just like the vibrant neighborhoods of a city, each offering a unique flavor and vibe, the stock market is composed of various sectors, each with its own distinctive characteristics. For instance, let's consider the technology sector. This is like the city's innovation district where tech companies ranging from software to semiconductor manufacturers reside. Here, the pace of progress is rapid and the air is buzzing with creativity. This sector is driven by constant innovation as companies strive to stay ahead of the curve, making it an exciting albeit volatile neighborhood. Next, we have the healthcare sector. Picture a wellness hub in our city, where hospitals, pharmaceutical companies, and biotech firms work tirelessly to nurture our health. This sector is driven by the quest for improved treatments and cures, making it a critical component of our market city. Then there's the energy sector, the powerhouse of our city. This sector, comprising oil, gas, and renewable energy companies, powers our economy, much like a city's power grid. It fluctuates with the ebbs and flows of global energy demands and policies, making it a sector to watch closely. Financials, consumer discretionary, utilities, real estate, industrials, materials, and consumer staples are other sectors, each a unique neighborhood in our city, contributing its own flavor to the overall market landscape. Yet, just like any city, each sector faces unique dynamics and challenges. Economic cycles, sector-specific metrics, external factors, and market sentiment all play a role in shaping a sector's vitality. These are akin to the weather, the city's infrastructure, unexpected events, and the residents' mood, respectively. They can cause a sector to flourish or falter, making the stock market a complex yet fascinating city to explore. So as we navigate through this city, it's crucial to understand its neighborhoods, the stock sectors. By doing so, we can make informed decisions, mitigate risks, and potentially reap substantial rewards. Yet, like any city, each neighborhood faces unique dynamics and challenges. So, buckle up, as we delve deeper into this city of sectors in the upcoming scenes. Economic indicators act as the stock market's weather forecast. Just like the weather, the economy has its seasons of growth and contraction, and these cycles play a significant role in the performance of stock sectors. Imagine economic indicators as your radar, providing an overview of the economy's general health. They're the big picture, the macro-level data that give us a glimpse into the overall economic climate. One of the most important economic indicators is the gross domestic product, or GDP. It's essentially the total value of all goods and services produced over a specific time period. When GDP is growing, the economy is in good health, and when it's shrinking, well, not so much. This growth or contraction can have a direct impact on the profitability of companies within certain sectors. Next up, we have unemployment rates. High unemployment can signal a sluggish economy, which can put a damper on consumer spending. On the flip side, low unemployment often means more people are earning and spending money, which can fuel economic growth. And speaking of spending, consumer spending is another critical economic indicator. It's a measure of how much people are buying, and it's a significant driver of economic activity. When people are confident about their financial future, they tend to spend more, which can stimulate growth. So, how do these indicators affect stock sectors? Well, in a thriving economy marked by high GDP growth, low unemployment, and robust consumer spending, sectors like technology and consumer discretionary often flourish. These sectors tend to be more sensitive to economic cycles, so they're likely to perform well when the economy is humming along. But what about when the economy is not so rosy? That's when defensive sectors like utilities may come into play. These sectors provide essential services that people need regardless of the economic climate, so they may hold up better during downturns. A booming economy often favors sectors like technology and consumer discretionary, while utilities may thrive during downturns. So keep a keen eye on these economic indicators. They just might give you a sneak peek into the stock market's next season. Sector-specific metrics function as a sector's DNA, offering insights into its performance. These metrics, such as revenue growth and market share, are like the vital signs of each sector. They tell us how a sector is doing and give us a glimpse into its future prospects. Picture this: you're looking at the tech sector, and you notice a steady uptick in revenue growth. This tells you that companies within this sector are generating more income, which is a positive sign. But what if, at the same time, the market share of these companies is dwindling? That's a red flag, indicating that despite the growth in revenue, the sector is losing ground to competitors. This is why it's crucial to consider multiple metrics to get a well-rounded view of a sector's health. But what about the external factors? Well, just like a sudden storm can disrupt a picnic, external factors can throw a wrench in the workings of a sector. Think regulatory changes, geopolitical tensions, technological disruptions. These are all plot twists in our detective story. Regulatory changes, for instance, can act like speed bumps or turbo boosts for sectors. A new law that promotes renewable energy could spur growth in the green energy sector, while stricter regulations could slow things down. Similarly, geopolitical tensions like trade disputes can impact sectors that rely heavily on international trade. And let's not forget about technological disruptions. A groundbreaking invention can catapult a sector to new heights, or it can render an entire industry obsolete. So, in our quest to assess sector health, we mustn't overlook these external factors. They can be game changers, altering the course of a sector for better or worse. In essence, understanding sector-specific metrics and being aware of external factors is like having a compass and a map. They guide us through the complex landscape of stock sectors, helping us make informed decisions. Regulatory crackdowns or trade disputes can ripple through entire sectors. So keep your detective hat on and your eyes peeled for these plot twists. They could be the difference between a profitable investment and a costly mistake. Comparative analysis is akin to assembling a puzzle, revealing the broader landscape by comparing sectors. Think of each sector as a unique piece of a jigsaw puzzle. Individually, they may not reveal much. But when you start comparing them, placing them side by side, you begin to see the bigger picture. This, my friends, is the essence of comparative analysis. Comparative analysis allows us to evaluate sectors against each other. It's like a friendly competition, where each sector tries to outdo the other in terms of growth prospects, valuation, and competitive advantages. But remember, it's not always about finding the sector with the highest growth or lowest valuation. It's about understanding the unique dynamics that drive each sector. Let's take valuation for instance. A sector with a high valuation may seem overpriced at first glance. But what if that sector is the technology sector, known for its high growth potential? Suddenly, that high valuation might not seem so outrageous. That's where growth prospects come into play. They provide a glimpse into the sector's future, helping us anticipate trends and changes. A sector with strong growth prospects today could be tomorrow's market leader. Then, there's the competitive advantage. This is where a sector stands out from the crowd. It could be anything from a unique business model, a proprietary technology, or even favorable government policies. A sector with a strong competitive advantage is like a castle with a moat, capable of withstanding market downturns and fending off competition. But here's the catch. Comparative analysis isn't a one-time activity. It's an ongoing process. The stock market is a dynamic entity, constantly evolving and changing. Sectors rise and fall, trends come and go. That's why it's crucial to keep your finger on the pulse, continually updating your analysis to reflect the current market conditions. So remember, when it comes to unraveling the mysteries of the stock market, comparative analysis is your trusty compass. It's not about predicting the future, but about making informed decisions based on current trends and patterns. Comparing sectors within or across industries helps identify potential winners and pitfalls. There you have it. By integrating economic indicators, sector-specific metrics, external factors, and comparative analysis, you'll decipher sector health like a seasoned detective. Remember, the stock market is a bustling city, each sector a unique neighborhood with its own dynamics and challenges. In your detective toolkit, you have economic indicators that act as the stock market's weather forecast. Sector-specific metrics give you insights into a sector's DNA, while external factors can throw unexpected plot twists. Finally, comparative analysis helps you assemble the investment puzzle, pinpointing opportunities and potential pitfalls. It's crucial to stay vigilant, though. The stock market is a thrilling thriller, always brimming with surprises. But with these tools at your disposal, you're well equipped to navigate this city of sectors, uncovering the secrets behind their vitality. That wraps up today's ProsperFin TV episode. If you found this helpful, give us a thumbs up, drop a comment, and share with your friends. Don't forget to subscribe for more finance and investing insights. Until next time, happy investing.